the midpoint of inefficiency or a actual gap is consequent encroachment. It's the midpoint. The differentiation between an order block, which is a real range that has been offered liquidity, where the range has closed with a body like this right here, the midpoint of that is mean threshold. So that's the two distinguishing factors that make up the midpoint. Does the body disregard that midpoint? No. Can it cross over that? Yes. What do we call that? Mohawk. Just like you have to allow it to be there. Just allow it. Okay. So while we have very specific levels, the bodies of the candles are telling you the narrative. So yes, it does go down below midpoint of that. Okay. And when I first started teaching my order block theory, when I talked about mean threshold, everybody would think, okay, well, I can put my stop loss right below mean threshold and it shouldn't hit my stop loss. And then because they don't know what they're doing and they're trying to write books or they're trying to make courses and mentorships all around it, and they can't trade with it, can't be showing it in their own hands working, they join the bandwagon. This stuff's made up. It's conjecture. It's not real. It's fraud. It's renamed something else. But if it was renamed, why can't someone else do it too? You have to have a stop loss that's going to at least allow for that mohawking, that little push beyond the level of where we expect the real turning point. The real turn in price. Is it happening and justified and confirmed with the bodies of the candles here, here, and here? Absolutely. That's exactly what I was watching when I was doing the trade. I want to see, does it keep supporting that? And it does. Then it rallies through. Now, this range here, these quadrants here, which is not quarters theory, this level up here, all this shaded area here, quarters theory would have never even referred to that. This is where I believe that price was going to draw to from down in here. Okay, so if this level from here all the way up, best case scenario, terminus would be the high end up here, 14,467.5. So that range is what I think that price will traverse from here to here. If I'm right, if I'm accurate, and if I'm dialed in on what I believe the algorithm is going to do, it's going to reprice to the high of that. Now, as a trader, do I demand, do I insist that it gets to that upper end, the upper echelon of the best exit? No. In my mind, what I was interpreting was, does price want to react off of that? And if it does, I want to see how fast it can reach to the lower quadrant, which is this level here. So if we measured from the low of this blue shaded area all the way up to the top and divide that in half, that's this level here. That's consequent encroachment because it's an inefficiency on the daily chart. I want to see how fast we trade up into that lower quadrant. Does it do so real quick? Well, look what it's doing here. It's hitting the low end of it here and consolidating. Now, as soon as it does that, I'm looking at my immediately, what's the closest proximity discount array? It's this order block. But we're also trading real close to what would be mean threshold of that. So I have to make an allowance for what? There's got to be 3 PD arrays. 3 PD arrays that every single time I'm looking at price as an entry, or if I'm moving my stop loss, I have to have something that's framing it where there's 3 PD arrays that would otherwise be used as an entry. If they're not respecting price, all 3 of them fail, then I'm wrong. That's where I'm placing my stop loss. Every single time I'm moving my stop in profit, never opening it up wider. When I add a pyramided entry, sometimes it'll make the stop loss move a little bit, and then I quickly adjust it to where the risk needs to be based on 3 specific PD arrays. So if we're looking at this down close candle here, and on this candle here, I'm watching price. While I'm not using it as an entry because we're in the target, the low end of where I was seeing it as a draw, which is the daily volume imbalance, that blue shaded area. We can't take a we can't take a pyramid there. We got to be in the mindset of taking partials. So as it's digging in to this blue shaded area, I'm measuring how much time it takes to get to the first lower quadrant. So we hit it here on the low end of the blue shaded area. We consolidated. We have 1 discount array here. How's that a discount array if we're so far away from your entry? because this is unrealized up here. The upper part of that shaded area. Remember I was talking about this is a implied dealing range. It means it's not there yet. So if I'm buying down here and I think that the market's likely to draw all the way up here, best case scenario, which is the terminus level of 14,467.5, the upper quadrant or upper level of that blue shaded area, that's what I anticipate seeing price do. I want to see it traverse from here all the way up to here. And I'm willing to submit to the time that it takes to get there. But is it logical? Is it sound money management and trade management for me to just simply demand that's all I get out of the trade? Hell no. No, absolutely not. And especially, moreover, if you're a new student, if you're someone that's trying to learn how to do this, you want to have logical places predetermined where you're going to take partials off. Time frame, the larger the imbalances, or like in this case, the volume imbalance, it's a larger range. The smaller the time frame, the smaller the imbalance. So if we're going to be using a higher time frame, for instance, like a 4-hour daily or weekly, I'm absolutely interested in the quadrants. Anything less than that, I'm only interested in the low, the high, and the consequent encroachment midpoint level. Because this is a daily volume imbalance, I want to know where that first quadrant is and how fast does it reach up in there. It does it real quick and energetically. And what is it telling me? What is it telling you? Where did it close on that candle? When it hit it, what did it tell you? Did it close below it? Nope. Closed above it. That is a signature. The algorithm that delivers price, there is a class of trader that is actively among all of us. They're not out here trying to draw attention to themselves. They are cannibalizing everything, okay? They have created high-frequency trading algorithms to do a lot of what they do. And when these things like this happen, it tells their algorithm, like I have Enigma. Enigma is not what books price. Enigma, it handshakes with the algorithm that delivers price. And what does that mean? My algorithm would see this close above that upper quadrant and say, okay, now I can take a long if it trades down into a discount array. So it's going to have to go back through. Where are we at right now? We're here. So go back down. We have consequent correction of this wick here. Opening of this order block, mean threshold. So is it permissible to see price wick through mean threshold here, but not close? Yes. Does it do that? Yes. Does it close below mean threshold? No. Does it close below the volume imbalance here? No. So where's price going to go? Higher. Every other person that is deemed smart money, central bank level, cannibalizing traders, okay, they're out there doing these things, high frequency all day long. They're entering on this because they see this was the qualifier to say, okay, we're going to go higher. Now, if it would have closed below this quadrant level there, they're not going to take that trade. They're not going to be in it. Even if it does go up a little bit higher here, it might go there and then roll right back out of it. That's why these things are important. That's why I'm teaching it to you. Those are the little telltale signs that I call a signature that we're looking for in price. If it's not there, I'm not taking the trade. If it's not there, I'm not holding the trade. If it's not there, I'm not going to reach for another objective to take a partial. Where's the next level in quadrant? It's the consequent encroachment. It reaches energetically right here. Where's the close on it? Above it. What's that telling you? It's going to keep fucking going up. Okay? It's going to keep going up. That's logic, folks. That's how it's done. That's real fucking order flow. Save your... This candlestick's close here. And then the very next candlestick, and again, this is daily chart. So every candlestick here is a daily representation of the highest high and the lowest low, where it started trading, where it stopped trading. Okay? I'll add this because this is my last video. This set button here, I use this interchangeably. So if I click this, it changes sometimes a little bit. You can see, watch this candlestick up here. Okay, watch the close of it. It'll change. See how it's a little bit higher there, and it's lower there. I use both readings. I use both readings because I want to have those levels in mind, because Traders are going to have it toggled on sometimes, and sometimes they're not going to have it toggled on. So I want to know what retail's doing, and a lot of retail uses TradingView. And it's not a knock against TradingView. I love this resource. If I didn't like it, I wouldn't use it. Okay, should you use it for your own trading? That's something for you to determine. I get nothing from them. They've asked me to have an arrangement where they give me something for telling you to use it. I said no, and that's 100% honesty. I have no affiliation with no one. If I tell you something, I like it, it's the truth. If I tell you it's bullshit, it's the truth. Okay? No one's influencing my opinion about anything. No one's going to get me to say something nice about something that isn't good. So it is what it is here. I don't sugarcoat anything. But just so you know that this is the settings I have here. So is it set on the blue? No, it's set to off. See that? So I used these 2 reference points right there. That's what that volume imbalance is. So that was in my chart this morning while I was taking the trade live. You watch me execute, you watch me manage the trade, and it was based on this logic that we were down here, and it's going to do what? Trade up here. But ICT, you're teaching support and resistance, buddy. You're just making it complicated. Why didn't it go up to that low? It broke below this low right here. Why didn't it go up there? Because it doesn't fucking need to go up there. It doesn't need to go there. It's not going to go there. Where's it going to go? Where I'm telling you it's going to go. The algorithm that delivers and books price, that's a predetermined, it's a scheduled event. It's going to happen whether you fucking own it or not, whether you buy it or short it. It doesn't matter how many people are buying it. It doesn't matter what the volume level is. It does not fucking matter. None of that shit matters. It's going to go up into this level here. Why does it need to go here? Why does it need to do that very thing right there, going up to that point? What's missing? Volume. Why would we say that? Because look, this candlestick's low right here. This candlestick's low. Well, I'll just borrow this. It went up to that level there. So if it's support resistance, why not just use this daily low? Because it's not fucking support resistance. Why didn't it stop at this previous daily high? Because it's not fucking support and resistance. So what am I looking at? I'm looking at the difference between these 2 candlesticks bodies. Even though they are joining and slightly overlapping with these 2 wicks here. This candlestick's wick and this candlestick's tail. Let me elongate a little bit so you can see it. So this one has a little bit of a tail underneath it, and this one has a little bit of a wick on the upside. Okay, you see that? The fact that it doesn't have a body overlapping the close to open of these 2 candlesticks, the algorithm will reprice to that. But it's going to offer a revisiting of this area because there's no body. Now, there still isn't a body. It's just a wick. Today's wick went there today. And volume imbalances, we know that it's likely to go through them. That's one of the PD arrays that you have to have a lot of flexibility. And they can also be used multiple times until, this is for your notes for the folks that aren't writing anything down, once there's a body laid over top of the close, the open here, whether it be an up close or a down close, once the body is laid across that, I'm not going to refer back to that volume imbalance ever again. That's not to say that you can't use it again. I'm saying that I won't use it. That means it's expired at that point. But it will not. And we drop down to a 4-hour chart now. You see how even on the 4-hour chart we have that. But look, was that a candlestick body? Nope. But on the 4-hour, what do we have here? Did it close over top of that with a body? Nope, it still has this portion here. So this is still in play. It can be utilized again. It's not expired. 60-minute chart, same thing. Did the body close it in on any one of these candlesticks? Nope. So that does what for me? It tells me that this needs to stay on my chart. If we go into a time frame, hourly, 4-hour, or daily, and a body is laid over top of it, why am I using these time frames? Shit, he just read my mind. Why not any other time frame lower than that? Because 1 hour, 4-hour, and daily are my swing trading time frames, and I don't want to use a daily volume imbalance and cancel it with something less than an hourly chart.